For many of us, 2020 was the hardest year of our lives. Australia is still reeling from the economic and social impact of the COVID-19 pandemic. However, the pandemic has accelerated the push towards a digital economy and empowering Australians through technology. More of us are working from home than ever before, choosing when we come into the workplace. We're using video calls and other communication tools to save time and get more done. One sector critical to the nation's ambition to be a digital economy is the Fintech sector, and its growth through the pandemic has been critical to the economic recovery. It's employing thousands of Australians already and growing rapidly. It's also transforming the way we manage, save, and spend money. Australia's largest emerging companies are fintechs, and they are drawing overseas investment into the company. Many, like Afterpay, Zip, and Upbank, are household names. But crucially, they are helping everyday Australians get smarter with their money. They are teaching them how to save, plan, and capitalize on every dollar they earn. Fintech is slowly but surely changing the way we think about money in Australia. Not only is it directly contributing to our economy, but it's making it stronger. Here at Intersect, we're discussing this future and asking the big questions. We'll be hearing insights from new voices in the sector and giving a platform to some of the behind-the-scenes talent that have put Australia's fintech industry on the map. So, sit back and enjoy Australia's most thought-provoking conference, Intersect.
Hello and welcome to Intersect's digital program run and hosted by Fintech Australia. My name is Stuart Keane and I'm the Community Manager here at Fintech Australia. The digital program is an opportunity to extend our reach and showcase the latest fintech trends, policy developments, or companies at the forefront of new technologies or products for those that cannot attend the physical event or have purchased a virtual ticket. We would like to take this opportunity to thank our major sponsors, Victorian Government, Austrade, Xero, BPay, and Data Action. And I would also like to thank our digital sponsors, Maneuver, BDO, the Argyle Network, and Q2. I would now like to introduce to you Will Fura, Chief Strategy Officer at Q2, who will be moderating this session today. Thank you for participating in our digital event series. Thanks, Will.
Thank you so much, and really happy to be here today. I wanted to welcome everyone and just say how delighted we are that you have chosen to spend some time with our discussion here at Intersect. We really appreciate the opportunity to visit with everyone during this warm-up event. And I'm really excited to be joined today by Andrew Hahn, who is the Chief Operating Officer at Semper Capital. Andrew, you want to wave to everybody? There we go. And Luke Rankin, who is the CTO at Simple Loans. Luke, welcome. It's great to have both of you with us. Thank you so much for joining. Both of these companies, are recognized for their innovative approach in the Australian market and the experiences that they deliver that are a critical part of their innovation and just their innovative company stories. So having a good experience as a customer or as an employee is important. There's absolutely nothing new to that statement. But what is a good experience, and how has the pandemic shifted those expectations, not just for the people that are seeking out the services that both of you offer, but for the employees that you work with that are members of your team? So these are some of the questions that we're going to explore in today's discussion. And so with that, we just wanted to we'll get started here and get this thing moving and let you hear from the real experts. So Andrew, I'm going to start with you. So what challenges did Semper encounter in terms of delivering good experiences during the pandemic? And how do you take steps to deliver remotely? And how have you overcome some of these challenges?
Yeah, great question. We can allocate the experience from both a customer-friendly experience and also maybe our internal operations, our employees. Coming into the pandemic, we had a front foot forward. we were moving office before the pandemic hit, and our over that Christmas period, our building owner couldn't move us in quick enough, and by that nature, we were already dispersed. So what effectively happened is when the pandemic hit, all our operations were already ready. We didn't need to sort of reinvent how we were going to do workflow. We'd just been forced into a position leading to when we could physically move into our new office facility. And it took us 6 months actually to finally move in. But during that time frame, as we were effectively having a dispersed team, we had to pivot quite dramatically with how we dealt with our customers. Now, the interesting thing for our business is we have fairly large loans that we need to write, and they're usually brought to us by a broker that has that mandate for that customer. So it's actually the broker's client that's coming to us in the first instance, and then they become our client as we write that loan. So what that meant was the broker that brought us the business needed to have the surety that we're going to take that ball and we're going to look after his client to make sure that he was being looked after. And the feedback we were getting at the time was that with the pandemic occurring and major offices spilling out and people in some of the other banking environments simply being unable to attend their workplace, there was no follow-on for some of these brokers' clients. The other interesting thing, though, I would say about what we do is we can have a broker that's based in a totally different state representing a lender or a borrower that's in another state. So we would have a broker maybe that was in Queensland representing a loan opportunity in Perth. So we've got geographic dispersion as well. Now, how do you pull all that together? We wanted to say, look, we're available to attend the inquiry. That was the first thing. Get the confidence then that if the inquiry came through, then we're actually open for business. We're actually available to lend the money, and we've got someone that can actually attend from that process. So we always say, we want to be fast with how we generate our loan opportunities. We want to make sure that the broker is being represented a fair price for that. But also, we also knew there had to be a bit of flexibility. We were seeing in some of our existing loan book customers that were starting to suffer. And so we then had to work at, well, how can we flexibly accommodate the fact that they were having difficulty servicing some of the opportunities. So that would also mean that maybe we need to roll forward with some capitalization of their interest or extend their loan terms. So the flexibility became very apparent because we people were saying, oh, it's going to be a short recovery. Donald Trump said it would all be over by Easter. People were thinking about the big V jump. But what really became apparent was what they called the K recovery. So certain industries were absolutely nailing it, benefiting from COVID, and others were dipping. So if we had a potential client that was involved in catering in the hospitality industry, that business basically shut down overnight. Now, it doesn't do me any favors to get impairments on my loan book. It's an administrative burden for that. So we had to work out a solution to make sure that as a client, they were being satisfied and looked after. But
so Andrew, I'm sorry to interrupt from, I don't even know, 15,000 miles away. How far away am I? Pretty far here in Austin, Texas. But because your team was remote, you were already working in a way to where you could build the confidence with the brokers.
Correct.
Right? Your team was already used to working in a distributed environment. You were already used to delivering remotely, and you were used to working across boundaries. So you were in a perfect position.
Exactly right. And the other thing I'd say is from our internal operations perspective, it wasn't so much that COVID disrupts our existing employees because they already had that front foot, as you mentioned. But we've got lots of allied businesses that work with us. We've got valuation firms, we've got legal documenters, we've got regulators. We had an integration tech team that was also doing other additional pieces of work for us in our platform. They were distributed all over the place as well. They had issues in their own particular states. I mean, for instance, the state of Victoria went to a much harsher lockdown than Sydney did in New South Wales. So we had to work with that. If valuers had to go to inspect a physical premises to undertake a valuation, what happens if effectively you're not allowed to group people together, and you've got tenants in those buildings that are scared about letting people in to inspect the premises to actually complete the work? And at the same time, the valuers themselves are saying we've got accessibility issues. We don't even know whether our insurance policy is going to cover us for the work that we do at this moment. We're still waiting for feedback, whether or not this is deemed by the World Health Organization at that time a pandemic, and then we can rely on the biosecurity clauses in the policies. So there was all these things moving forward. The great thing that ties it together, though, is in a traditional banking sense, people might work in silos. You'll have a BDM group, and they then finish their work and they pass it to another floor, which is a credit group. And then when they're finished and the loan gets written, it goes to another area, which is loan management. We pull it all together on the one platform. So everybody can visibly see where some customer's loan application is sitting, or if it's been written, how it's performing, how it's been managed, whether or not there's an issue with potential serviceability on that loan when it's due for repayment. So, and everybody in our team got given visibility. So it didn't mean that they could necessarily action particular elements of the platform, but they at least got the visibility. And we've always taken the same process with some of our brokers, with some of our valuers, with our lawyers. We have this you see what we see scenario. So we want to be fully transparent. And what we find, though, is when we do go into our credit processes, it just enables us to write loans that much quicker, because you're not dependent on people grouping together, hearing discussions, about what's happening with certain customers or clients, in the general, what we would used to think the general office environment. At that stage, we just weren't together, and by that nature, it was very important that everybody could see what was going on at various aspects of a particular customer's requirement.
Yeah, well, that's great. I mean, that's really fortunate that you were prepared, and also that you've been able to, continue, maybe not business as usual, but you've been able to continue your business. And I know that the businesses that you've worked with, the ones that you've worked things out for, as well as those that you've been able to create new capital opportunities for, are appreciative. I mean, I do really believe that people in financial services were the front lines of the pandemic, providing aid, whether it was in the United States or Australia or Singapore or wherever. So those are great stories. Thanks for those. Hey, Luke, let's move on to you real quick. And Simple, you all started completely remote as well. Tell us a little bit about how your business was running. Was it business as usual, or were there substantial adjustments that you needed to make for your customers and your employees?
Sure, thanks for that question, Will. Look, Simple started as a cloud native business in 2018, and we've been ramping up progressively since then. And I'm personally based in Singapore, whereas the primary business is in Australia. So I've been working remotely since before the pandemic began, and in some ways it was kind of nice to have some of the team join me in that journey where we all had to go remote. I mean, part of our daily, a bit like Andrew, part of our daily operating rhythm is working across many geographies. We work with Australia, we work with the US, India, Israel, Canada, and it's really just how we work day to day. And while we've got that physical office space in Melbourne. I think we started with the mindset that it always needed to be a flexible working environment for our employees. And in hindsight, what a good decision that was to approach it from that angle. It's one of those times where I'm really grateful in a way that I'm not in a traditional lender and a big organization, because those challenges of being able to pivot and work remotely when you've never considered that sort of scale of remote workforce is really, really different from a startup that's cloud-based, that has that sort of mobile working ingrained in it. I'd say, so for us, the technology really wasn't a barrier. It was probably just an extension of what we were already doing to get to remote work. I think in some places the prolonged lockdown was really more of a challenge in terms of communication and employee well-being. We sort of take certain things for granted. We use our own frame of reference for how we adapt to this environment, but everyone's living situation has very different circumstances, whether it's parents that are having to juggle homeschooling, or cramped living space where suddenly you've got your whole family in the environment, isolation if you're someone living at home, and just the general impact to people's mental health of the broader stresses. So, all of that, I think as leaders, is probably things we had to factor in more to some extent than the technology enablement. If we look at our customer side, similarly, end-to-end, our customer journey has been digital from the start. We don't have any bricks and mortar. All the advertising and origination of loans that we write comes from digital marketing, online advertising, etc. So really not much in terms of a change there. I guess we slowed down a little bit, like consciously slowed down from a business perspective, because we needed to understand the credit risk landscape. It's not something that people have dealt with before, and we were cautious to get a sense for how that was going to impact our business before we really continued our ramp up. And I guess that gave us a bit of opportunity as well to focus on the technical side of things, introduce more features and products around fraud detection, around the broker channel, manual document processing, digitizing parts of that, and just a lot of other automations. So,
hey Luke,
yeah.
Are you and your team still working on really understanding what the credit risk environment looks like? I would think for both you and Andrew, I mean, this is still very much evolving. Or are there some things that have stabilized, and are there some, leading indicators that are making themselves clear to you and your credit teams? I'm just curious for either you or Andrew.
I would say this. Everybody, I think, in Australia has been absolutely gobsmacked at how well property prices have held up and increased. Because this time 12 months ago, nobody was calling that there'd be such an escalation in value, and people actually thinking there'd be a diminution and prices and security values would start to collapse. What we've actually seen is they've expanded, and I have to say, on the back of that, it's given so much more consumer sentiment and positivity that we're going to get through this pandemic. People will get vaccinated. Things will get back to normal. All right, we can't holiday overseas, but let's do it domestically. And people are being prepared to invest in their businesses and hold on to their staff. And I think it's actually been remarkable. I don't think anyone could have seen it. But the main thing is, and you know what I just think about this now is, we used to travel a lot, interstate, flying. We love it now. We don't need to, we can get so much work done when we're not in transit, and it's great that way. So I haven't actually seen it at this point in time. though, it's always this thing: are we at the beginning of the end of the pandemic, or are we at the end of the beginning of the pandemic? And could this flip around again? Right. So, look, from what it looks like at the moment, I'm cheerful and positive. Right.
And Luke, you're a little more on the consumer side than on the business side. Just curious around what some of, if you're starting to see, some clues.
Yeah, look, I think we probably echo that sentiment. In some ways, it feels very much business as usual, but it's never a fixed process anyway. So it requires that sort of constant evaluation and monitoring for changes. And there are, in Australia, there's changes as to the different benefits that are available to people, and there's steps forward, steps backwards from time to time. What's the impact of international borders being closed for a prolonged period? So yeah, definitely. I think we're a bit optimistic and surprised at how quickly things feel like they've returned to normal, but also cautious.
Well, just moving just a little bit, I wanted to, because you're both in lending, and doing loans requires many hands in the pot. There's always a lot of people that have to touch, getting any of these loans approved. I mean, $60 million loan, $100,000 loan, or a $75,000 loan. It really doesn't matter. A lot of people need to sign off on it because those add up over time. And so my question is, when you think about the UX and you think about the premium that is put on the UX for the borrower or the broker or any of the number of people that you work with on your teams to actually create the opportunity for one of the people that is borrowing, how does that compare with the employee UX? And are you finding that you're spending just as much time designing, developing, thinking, being thoughtful in both of those areas? I'm just curious how you look at this kind of, front of the stage performance that you put on and this behind the curtain performance that you need to put on. Can y'all elaborate on that just a little bit? We'll start with you, Andrew.
Yeah. So you've got a front end process, you've got a back end process. When we talk about this US experience for our employees, it's the back end process that we just want to take the frustration out of the system. It's going to work end to end. There's an intuitive workflow that they can follow. They need to pick up and run with something. If somebody wants to make some sort of adaptation or extension to what we've done, it doesn't compromise, and the system needs to fall down because of that. So on the back end side, I think that's where we can really build the employee experience, because if they get frustrated, then they start comparing, well, this group does it that way, and Joe down the road's building this, and why can't we do that? So we've got to take back that feedback if there were sort of pressure points, and so certain reasons we might need to have those. You do have a credit and a sales process that are separate processes for this reason. One's writing the money, one's protecting it. But at the same time, if the platform's there and people can intuitively follow how things are progressing, and they know it's going to work end to end, and that's great, and that's what you want. That's what you want to get people engaged and get rid of that level of frustration that sometimes you'll find with a legacy system.
Yeah, so for the employees, it's that flexibility, the ability to make exceptions, because there are things that change, especially on the back end process, but those can't crater the system.
Correct.
They must be built in. So it needs to be there, it needs to be fixed, it needs to be ready, but it must be flexible because there's always modifications.
Right, and there always will be. And like it could say, we had an existing legacy system, and we saw the drawbacks that were associated with having to keep doing bolt-ons to that over a period of time, to the fact that it became more and more cumbersome. One of the reasons why we went to software as a service is if there's an upgrade occurring, that upgrade, when it occurs, we'll filter through every single module end to end, and we're not going to see any problems. So that's a great benefit. I could also say that on the sorry, I just on the front end side, you want a system that also feeds up to your client facing elements, such as if you're having a portal where data is being drawn and put through into the back end, you don't want that to be a slow process. I mean, there's nothing that frustrates people more than they're waiting for something to refresh, or I'm just waiting for the system to go up a gear. You don't want it to slow down. I mean, there's nothing that switches people off more, I think. So you've got to make sure that there's no time latency in sort of that front end feeding to the back end process, and then obviously a really good thing, I think, sometimes especially from our broker side, we can generate just very simple dashboards to say, this is how things are progressing. So they don't really need to delve into the detail too much, but they get the picture. So, yeah.
Very good. Yeah, thanks for that, Andrew. Luke, love to hear how you look at that, the front of the stage, the consumer facing as well as the employee facing. Tell me a little bit how you all negotiate that user experience negotiation.
Well, I think, look, we start from the basis that both are critically important, the user experience as well as our employee experience, for different reasons. Naturally, the customer experience always takes priority, because I hate to say it, without the customers, we don't exist as a business. But also the employee experience, if they're frustrated, if they don't have the best tools that are available to help them do their job effectively, or they're delayed, then of course that impacts the customer experience as well. For us, the approach has been around friction points. Where are the friction points in the customer journey? And that really is almost being obsessive in terms of the questions we ask ourselves at a really granular level, end to end. Starting with, is that data point that we're asking from the customer really required? Do we really need it, or are we just asking for it for the out of habit, or for the sake of capturing that? What's a low friction way we can get it? Have we already got access to that information via another channel that doesn't require the customer to venture more information? Where are they getting stuck? A bit like Andrew said, with dashboards, really understanding that conversion flow in our funnel and seeing where we've got bottlenecks and what's the reason for that. Is that a technical reason? Is it a process reason? What do we need to tweak? And I guess the other point is really, what channels do our customers want to use, to engage us to apply for a loan? And are we really tailoring our experience to the channels that the customers want to use versus what we think might be the best approach? Just pivoting to the employee experience again. One of the surprises for me personally, moving from a big organization to a startup, is how the cloud technology and software as a service has accelerated exponentially in terms of its capability. And it's really a luxury to have access to what I would say are enterprise grade solutions across the portfolio at a acceptable cost. A really reasonable, cost-effective solution that lets our employees use enterprise-grade solutions, even though we're a new and emerging organization. And all of that helps. Helps people feel happy about coming to work. It means that they feel they're current. They're using the best technology, and it makes their lives easier. So.
Yeah, and I think with the stress, I think you mentioned earlier, just the radical compassion that we have all had to have with every single person that we work with for their home situation. I think providing the best tools and the best solutions to those employees is a real feather in your cap as not only as a leader, but as a leading top talent attracting fintech firm, I think is really critical. So yeah, hats off to you for those comments earlier as well. I think that's a key point for everyone to pay attention to today. I know we are where we work for sure. Andrew, only because you mentioned it, if we could talk about the ball and chain of technical debt that you and your team were experiencing on your legacy solution before the enlightenment of a cloud solution. Could you tell us just a little bit about just some of the very big, considerations or maybe moments of enlightenment that you and your team had when you were switching from the legacy solution? I'm just curious on maybe what some of those big ideas were, those aha moments.
Even, we were in a position where we were still saving data on internal office servers. What's the risk of that? If you have a meltdown, we don't have to worry about that anymore. We've got it in the cloud. The fact that you could get potentially a malicious email, or the cyber security concerns are very much contained and well controlled. When we're dealing with regulators, when we're dealing with our own insurers, when we're dealing with some of our what we call our trustees, to be able to say, our data won't be polluted, it won't be compromised. We will filter it before it comes into the system, but once it's there, it's going to be well looked after. And the funny thing about, I suppose, our business is, in a structured finance realm, no loan's the same as the other, really. And, that's why we spoke about the flexibility earlier on. When you start having that on a bespoke system, it's all the little things that really start slowing you down. What happens if a customer wants to pay early? What happens if they've set just the wrong sum just by an error? How does the system capture that so it doesn't freeze everything, and you spend so much time just trying to unwind something that really doesn't give you any value benefit at all, other than the fact that finally we got it correct. When all that's all evened out, you're saving yourself so much time and money. So yeah, I always compare it to having an oil tanker and a speedboat. I think a lot of people make the mistake to think, we've got a legacy system. Why don't we just improve on that? And I don't think it's that easy. And I think sometimes you just got to think a speedboat's a different boat to an oil tanker. So go get a speedboat. If that's what you want.
Yeah, great. Well, those are great lessons, and I think it's interesting. I know your background. You've been largely focused on security and compliance. I think just through your career, and it's really interesting just to hear your lens on all of those items. And, there's just, here in the States, we just had one of our oil pipelines was extorted and hacked, and it created, chaos for, literally half of our country. Maybe we should, figure out how to use alternative fuels or something like that, but let's not get into that conversation. The point is that I think it's very important in financial services to be paying attention to that. So it's interesting that that's where you centered. Luke, for you and your team, because you've been, kind of digital native, digital first since your inception, are there any key lessons that you would never go to a company and work for that company if they didn't have what? If they weren't paying attention to what? I'm just curious when you think about how you all operate your digital initiatives and your innovation initiatives.
I think if you're talking about digital transformation and existing businesses that are looking to transform, the expression is often cloud first, right? So cloud first means when you're making a decision about your technology architecture, you should think about using cloud first before you revert to a traditional solution. I've tweaked that now. So mine's cloud only, not first, just go to cloud. The ecosystem has evolved so much, certainly in financial services. You have to begin with that, just for the uptick in terms of scalability, reliability, performance, and flexibility. And if you're still debating whether or not we should look at cloud first and then go to option B. I think that's a problem. Yeah, so that's probably that sort of mindset around really taking advantage of what's now available in the global market for software as a service cloud services is absolutely critical to my way of thinking.
Thanks. Yeah, thanks for that. And I think that's a really, great place for this next question. When you consider how you think about sustainable growth and where you see your business going, and we think about some of the next areas of innovation for you and your team, Luke, besides the cloud, where will you go and put your chips? Will it be incremental research? Will you spend your time working with, AI and machine learning around, working on new, credit models or, predictive models for those types of things? Will it be fraud? I'm just curious on the next big boulder that you feel like you're going to tackle, in addition to cloud and in addition to the platform that you've already deployed.
Yeah, I think it's an iterative process for us. It's not a huge transformation. Data and analytics absolutely needs to be a core part of that journey. And similarly, we're able to tap into solutions like Snowflake and Salesforce and Einstein Analytics for to build that capability around machine learning. But you need the data for that, and obviously the models. So that's on the roadmap. Expansion geographically is another one. Taking the blueprint that we've got and the success with Australia and expanding that to other markets. And then the customer experience is key. 80% of our customers are coming through the mobile channel. So how do we optimize that mobile experience so it's absolutely seamless, and take the pressure off the customers so they can get through that process as easily as possible.
Yeah, great, thanks. And Andrew, I mean, you on really kind of I'll call it the commercial or the business side, you have a few different things to consider. And so, same question to you. What will be maybe the next area or the next areas, plural, that you and your team will likely focus?
There's a lot of movement in the future. What they're talking about open banking, so where you can share data points between other service providers. So obviously, for instance, if we've got someone that's borrowing money from us, they've got a transactional banking activity that's also supporting their business. How will that start integrating with what we do? I suppose what's really interesting is traditionally the bank itself was what they called the point of truth for money flow. People would do final reconciliations against bank statements and sometimes just manually tick them off. The banks are now flipping that around and basically saying the platforms themselves are going to become the point of truth, provided the platform's actually recording where money's coming in and where it's going. The platform itself should be where it's correct, not necessarily at the transactional banking level. So I think where we go with open banking, I think is going to be a very interesting part of this sector. AI machine learning in terms of doing credit assessments, I still think, intuitively always will need an element of manual intervention in terms of assessing somebody's character. For the size of loans that we do, I think maybe smaller loans can rely more on algorithms for that. But for us, we just got to be always aware about potentially, what you say, bad agents or fraudulent activity. But you know what? A lot of where we're directing this has also been pushed a bit by our regulators in Australia. Like the whole anti-money laundering, know your client. I mean, there's so many ancillary API feeds now that you get with other groups that can do identity verification and anti-fraud type related activities for you. You don't need to try build it all in yourself. You can actually pull those feeds through, and that's where I think the skill's going to be going forward is, what is the appropriate feed to pull in, and how's that best servicing what you want to achieve. So
right. And then, just as a final parting thought, we have just a couple minutes left. One question that I continue to think about is just tell me about the speed with which you're able to move now that you weren't able to move. And I want you to go way back to the dark days of your careers, both of you. Go back 5 years and tell me at the speed that an organization could move, and tell me how different it is today. Luke, go ahead. Why don't you share on your side first?
Yeah, chalk and cheese, I think, is the comparison. To go from a position of having no business to a operating, growing business in 5 months, which is, personal loans, end-to-end personal loans business is quite remarkable, and something that would not have been possible previously, mainly because of that sort of sense of clinging to legacy platforms and not being those sort of change barriers around being brave enough to step away from what you've always known and shift to the next generation. So yeah, completely different. I wouldn't, reinventing the digital wheel. There's no need to do that anymore. If you're sitting there thinking as a technologist, I'm going to have to build this from scratch, you're probably asking the wrong questions, because that's just not how you can deliver value to customers and to business quickly now. So that would be my 2 takeaways.
That's really, really great insight. That's a great thought for all, I think, technologists. Andrew, go ahead.
The same with doing an integration of something that's new, you can just do that much quicker now, because simply the modules have already been developed, and you need a good team that can do your MVP or minimum viable proposition, stay pure to that, and you can be like, it can almost take you 4 years to get to the same position you can now do within a period of 6 months. And technology is just moving so fast anyway. With the big change, 5 years ago, I think one of the accountancy practices in Australia, KPMG, put out a fintech report, and they always publish the logos of the associated companies on the back page in the sector. And I think I've got one from 5 years ago, and it's about 30 logos of companies. I think I got one like 2 weeks ago, and there's something like 300 logos. I mean, there's so many new companies that are working with data, and they're able to do things that, if you try to do it yourself, it's just going to take you so much longer. So the key is find the guys that do it the best, and work with them, to leapfrog where you need to get to. So.
Well, only because you just threw me the proverbial softball that I can hit out of the park. That's an American baseball joke for everybody that doesn't follow American baseball. What was it like to work with our teams, the teams from Q2? I mean, have they, proven worthy of being one of those, best in class that have helped you get where you want to go? Sorry for that plug. I figured I needed to take it since you put it out there.
From my personal experience, for what we needed from our MVP, the main thing I needed was to know, and I had the confidence, the trust, that with my end-to-end solution, it was going to work mathematically. There was going to be not a situation where all of a sudden someone's trying to find where the last $16 belongs. Everything had to square off and net off at the end of the day with whatever else we tried to build into that platform, right? That's the incredible benefit that I've actually had with working with the Q2 product, because even though I can buy the individual modules, knowing that they actually fit together, we call it Lego blocks, however people want to describe it. It's just given us the confidence, that then we can have more time developing some of the extensions that we need to do to effectively make this more like a proprietary system for what Semper represents to the market. So.
Great. Thanks, Andrew. Luke?
Yeah, look, for us, time to market is absolutely critical, and as well as the features that we can offer on the platform. So, definitely a tick in the box for both of those aspects. The commitment to constantly enhancing the platform, and we we aim for at least 2 core product, upgrades a year, which we've stuck to, and we've seen a lot of benefit from that. And I also think there is the right focus on continuous improvement in terms of the delivery practices and the partners that we work with Q2. We're looking at other markets at the moment, and our MVP, our day one product, is going to be, leaps ahead of where we were for, say, when we first launched in Australia, and as it should be, and that's fantastic. So, yeah, the credit to the team we work with.
That's great. Well, Andrew, thank you so much for your time today. Luke, thank you so much for your time. I know that we have some live Q&A that is available for the audience, and I think the facilitator is going to help with that. But I really thank you for your time today.
Thanks, Will.
No, pleasure.
Thanks, everyone. I'll wrap up the meeting now. Thanks for your time.